Welcome to Tesla Daily News podcast on February 9th, 2026. Today we're tracking a fresh Model Y move in the US, a big change in how Tesla sells full self-driving, and a handful of competitive and regulatory headlines that could matter for margins and the long-term bull case. Story 1. Tesla quietly refreshes the Model Y lineup in the US with a new all-wheel drive price point. Tesla just introduced a new Model Y all-wheel drive variant in the United States priced at $41,990. The context here is simple. Tesla's core challenge in 2026 is balancing demand stimulation with gross margin protection. The Model Y remains Tesla's volume backbone, so every trim and price adjustment is effectively a lever on deliveries and profitability. Details-wise, the key number is that $41,990 price for an all-wheel drive Model Y variant. A new configuration can also signal Tesla is optimizing the mix, pushing customers toward versions that keep factories loaded while controlling discounting. Investor impact. A new trim can be bullish for near-term demand if it broadens affordability or improves value perception, but it also raises the recurring question, is Tesla using pricing power or leaning again on price to defend volume? Watch how this affects average selling price trends and whether it appears alongside incentive changes. Takeaway. The Model Y is still Tesla's demand thermometer. If Tesla can add variants that lift volume without heavy discounting, that's supportive for margins and the stock. If it's another step in a price war, it can pressure earnings expectations. Story 2. Full self-driving moves toward subscription only after February 14th. Elon Musk says that after February 14th, full self-driving will be available only as a monthly subscription. Previously in the US, buyers could choose between an $8,000 one-time purchase or a $99 per month subscription. The context, Tesla's valuation depends heavily on software-like revenue and margin expansion over time. A subscription model is the cleanest way to make the FSD business look more like recurring revenue, and it can reduce sticker shock for new buyers. Details. The big change is removing the upfront purchase option and pushing everyone into monthly billing. Investor impact. This could be positive for revenue quality if it increases attach rate, because more drivers may try FSD at $99 a month than commit to an $8,000 check. But the risk is churn. If users subscribe for a month or two and cancel, revenue becomes less predictable than bulls assume. Also important, if regulators or safety narratives intensify, a subscription-only model could make it easier for Tesla to change pricing, pause features, or segment capabilities by region. Takeaway for investors, watch for Tesla to disclose higher FSD take rates and watch gross margin commentary, because software revenue should lift margin if adoption is real. Story 3. Europe competition heats up as Volkswagen passes Tesla in 2025 EV sales. German broadcaster reporting citing JATO data says Volkswagen led Europe in electric vehicle sales for 2025, with 274,278 EVs sold, up 56% year-over-year. Tesla's Europe sales were reported down 27% year-over-year. The context, Europe is a key profit and brand market, but it's also where competition and regulation are intense. If Tesla loses share, the market will ask whether it's cyclical, product cycle related, or structural. Details. The headline is VW's 274,000 plus EV volume and the reported decline at Tesla. Investor impact. This matters because share loss in a mature EV market can pressure Tesla's growth narrative, which is central to its multiple. It also intersects with pricing. More competition often equals more discounting, which hurts automotive gross margin. Takeaway. If you're tracking Tesla, watch for Europe delivery trends and whether the Model Y refresh cadence is fast enough to defend share without sacrificing margin. Story 4. Gigafactory Berlin, Grünheide, is reportedly under pressure. German coverage suggests Tesla's Grünheide plant is running below earlier expectations amid softer demand, staffing changes, and persistent price pressure. The context, factories are expensive and underutilization hits margins fast. When a plant isn't operating near designed capacity, fixed costs get spread over fewer vehicles. Details. While the article frames this as demand and pricing pressure, the investor lens is utilization and cost absorption. This is less about the headline and more about what it implies for European profitability. Investor impact. If Berlin is not fully utilized, Tesla may need either stronger demand, exports to new markets, or product mix changes to keep per-unit economics healthy. Persistent weakness can lead analysts to cut margin forecasts and free cash flow expectations. Takeaway. A weak utilization story tends to be stock negative unless Tesla shows a clear plan to fill capacity with new variants, refreshed products, or regional growth. Story 5. India and the US strike an interim trade pact, but electric vehicles are left out. Reuters reporting says India will reduce tariffs on high-end American cars to 30% from as high as 110%, and it will remove duties on Harley-Davidson motorcycles. But electric vehicles are not included in the concessions, meaning Tesla does not get meaningful tariff relief through this deal. The context: India has been a long-discussed growth market for Tesla, but tariffs are a major barrier to competitive pricing on imported vehicles. Details: the key number is the 30% tariff on certain high-end cars, while EVs remain excluded. Investor impact: near term, this is a disappointment for a Tesla in India bull narrative if investors expected the deal to accelerate market entry via imports. Longer term, it subtly increases the likelihood that if Tesla wants India at scale, it may need local assembly or deeper policy negotiation. Takeaway: this is not a thesis breaker, but it reduces near-term optionality. Watch for any signals about local manufacturing plans if India remains strategic. Story 6. Robotaxi competition and the remote assistance debate gets louder. Waymo's chief safety officer disclosed that some remote operators who assist its self-driving vehicles are based in the Philippines. The context: investors often compare Tesla's autonomy approach to competitors. One key difference is operational design. If competitors rely on remote intervention, it can help safety and edge cases, but it raises questions about scalability, cost per mile, and what fully autonomous really means. Details: the notable point is that remote support is part of the operational stack, with operators located overseas. Investor impact: for Tesla, this is a double-edged comparison. Tesla bulls can argue Tesla's endgame is true autonomy without remote drivers, which would scale with much better unit economics. Bears can argue that today, real-world autonomy still leans on human support across the industry, and that delays are likely. Takeaway: autonomy economics matter. When you hear robotaxi, always ask, how many humans are behind the curtain, and what does that do to margins and scalability? Quick bonus theme to watch: the Cybercab timeline. A Texas newspaper recaps what's known about Tesla's Cybercab ahead of promised April production, including the concept of a low-cost, two-door vehicle designed for autonomous service. The context: a dedicated robotaxi platform could be a major narrative driver for Tesla because it suggests a new product category and a new revenue model. Investor impact: if Tesla hits credible milestones, the stock can react strongly. If timelines slip again, the market typically discounts the story. Takeaway: treat April as a checkpoint, not a guarantee. Watch for verifiable production evidence and regulatory readiness. That's the rundown for February 9th. Today's big themes are pricing and mix on Model Y, recurring software economics as FSD goes subscription-only, and intensifying competition in Europe with utilization concerns at Berlin. For tomorrow, keep an eye on any new regional demand signals, additional pricing changes, and updates on autonomy regulation or safety scrutiny that could move sentiment. If you value a balanced, investor-focused Tesla recap every day, subscribe to Tesla Daily News Podcast and follow for the next episode.